Retail investors and traders only look at the charts they put money into, and it's pretty much a mystery as to why price moves around because they're unaware of the structural support and resistance levels. Also, retail traders and investors don't understand the interplay between Tier 1, Tier 2 and Tier 3 charts. This means that they cannot stack probabilities because they don't know where structure is, and they cannot stack probabilities to determine a likely outcome to market direction. They suffer from fear of missing out, or fear, uncertainty and doubt. In this video, I'm going to give you actionable insights on how to deal with fear, uncertainty and doubt and FOMO. It's important that you understand how to look at the news and then how to stack probabilities by looking at structure. Let's run the numbers. In news headlines today, Mitsubishi Motors is pulling out of China. The US and Japan warn of China-linked hackers hiding in router software. China puts Evergrande's billionaire founder under police control. Evergrande has become the world's most indebted developer. Chinese property stocks slide to the lowest since 2011, as shown by the China Real Estate Developers Index. US crude oil hits the highs of the year. Prices have been increasing in oil because of the OPEC cuts. Last week, the Energy Information Administration reported that US crude inventories fell by more than expected to their lowest level of the year. A standoff in Congress brings the government to the brink of a shutdown. Just like the debt ceiling crisis, politicians are leveraging the economy to get their own agendas fulfilled. This, of course, happens on both sides of government. Meta unveils a new mixed reality headset in a push for traction on the metaverse. Meta is releasing their second generation of Ray-Ban smart glasses in October for $299. Rising loan costs are hurting riskier companies. As interest rates stay higher for longer, this pushes the interest expense of companies up, and it does the same thing for consumers. The risk of default is increasing, and that's why we're seeing a greater percentage of banks tighten corporate lending standards. The stock market sell-off pauses and the Nasdaq edges up. We're going to do deep dives into the charts, but it's good to see an overview. Higher interest rates are catching up with home builder stocks. The rate hikes are biting into profitability. Interest rates impact every economic sector. Bitcoin slides back towards 26,000 as surging interest rates trigger macro jitters. Crypto is impacted by the macro landscape. Even the looming government shutdown is likely to force the SEC hand in announcing Bitcoin spot ETFs earlier. Or will it? Please let me know your thoughts in the comments. The US Department of Justice opposes Sam Bankman-Fried's latest moves for temporary release. According to IMF data, the International Monetary Fund, 93% of central banks are involved in some form of CBDC work in 2022. That's a central bank digital currency. And the head of the BIS, the Bank for International Settlements, is urging cooperation between countries to create interoperable CBDCs. Chairman of the SEC, Gary Gensler, whenever he goes in front of the Senate committees, he always brings bad news to crypto, and this time wasn't any exception. The SEC has delayed Cathie Wood's ARK Invest application early. The SEC has the authority to either approve, delay, or deny spot Bitcoin ETFs. And we can see that the ARK21 shares Bitcoin ETF, Cathie Wood's, has been delayed. Gary Gensler's actions are not going unnoticed by the Senate. In fact, Patrick McHenry stated that the SEC puts investors at risk. Under the leadership of Gary Gensler, the SEC has failed. It's overlooked public input, taken no actions to address the concerns of Congress. He specifically stated to Gary Gensler, "Your efforts to choke off the digital asset ecosystem has created real harm for consumers, created more confusion and lasting damage." Gary Gensler's refusal to be transparent with Congress over many issues, including FTX and Sam Bankman-Fried, is leading to the concept of Gary Gensler being subpoenaed for the first time in history. That would be the SEC being subpoenaed by Congress. The SEC currently is out of control, and a growing chorus of people have been saying so. It doesn't matter what you trade or invest in, you must understand objective dynamic market structure, or where smart money buys and sells. Let's pop on the CTKS method monthly indicator for Bitcoin and just go through this, because this is really important to understand. There was a structural level of one support that turned to resistance at that particular level at 26,296. There was a higher level of structural resistance at 26,334, one above at 26,565, and a higher one at 26,893. Twitter was abuzz, or should I say X was abuzz, with the concept that Gary Gensler was going to be raked over the coals in front of Congress, and there was a lot of good stuff that came out of that. But the concept was Bitcoin, when it overcame these two levels of structural resistance, was heading up to the next one. And if it could get up to the next one and consolidate there, it was pushing up further. But we saw a lot of rejection wicks. What happened next? We tried to confirm this lower level, that 26,565 level, as support, but failed. What does that mean? We're going down. It's very simple to interpret structural levels. It's as simple as this. If it's not going up, it's going down. And a lot of people say, "Oh, Ken, it needs to be more complex than that." It's not really. It's that simple, but it's also that complex. Entering or exiting on structural levels is a very, very good idea, but it doesn't have to be smack bang on. You can put it around. But the concept is, we saw Bitcoin take off, Gary Gensler get absolutely flayed in front of Congress, and then what happened? The price retraced. The thing to note, this is a very, very positive development. What it's actually showing us right now is there's a lot of built-up, pent-up demand inside the crypto ecosystem. As Bitcoin comes up, everything comes up. You would see this fingerprint playing out on all the alts. And what did we see? These particular once support lines turned to resistance and have basically turned back to support. This particular level is very encouraging for the crypto market, but we need to look at the main markets. So let's do that. We'll blast through them. A big thank you to Dinesh. His comment from yesterday's video: anyone still in two minds about the CTKS method service, it's an absolute no-brainer. You only have to compare the SL lines in relation to the current price to gauge the probability of price going down, sideways, or up. In addition, you get the best commentary on the macroeconomics, which far, far exceeds any degree or PhD you'll ever get. Investing at this time in the CTKS method service will be a generational wealth-changing move. Thank you so much, Dinesh. Litecoin is a really important crypto to look at, so let's throw on the indicator from the monthly service. The one thing that we note, this strong support, currently price is underneath it. That's not looking too good for Litecoin at the current time. But we know we can't just look at one chart and say, this is Litecoin's fate. It's like you looking at gold without looking at silver, or looking at gold without looking at the yields and the DXY, or you looking at Apple without looking at the major indices. We must look at more charts. A big thank you to Kacharia, who said, if you have a knowledge of the Stanfield levels, it's one of the fastest ways to increase your money, still going slow and acting wisely, not in a rush. And there was some really good advice and some sage wisdom as well. Sun Tzu said, "Never let the enemy dictate your actions." For us, it would mean never take a trade just because you feel pressured in some way or due to the market move or an emotion. Thank you, my friend. Very wise words. What did we see? As Bitcoin spiked, what did Ethereum do? It spiked up. But as Bitcoin came back, what did Ethereum do? It came back. The choice to get into Litecoin or Ethereum actually depends on structure. And these lines that the indicator turns on are called SLs or Stanfield levels, because they mark up all of price history, not recent indicative price, and they also mark it up according to a standards-based methodology that you can learn and apply yourself. Let's just zoom in a little bit on Ethereum's action, and someone you know, thank you very much for your very kind comment. When we look at the structural levels by turning on the CTKS method monthly service indicator, and these levels change because of objective dynamic market structure. Market structure is dynamic. That means it's always shifting around. We can see that Ethereum lost this particular level, just like Bitcoin was under resistance. Ethereum was under structural resistance at that 1594 level. But this was a lot of structural resistance playing in here, and ETH was trying to get above it without success. When it actually got above it, all the shorts became liquidated. That pushed it with a lot of power through this particular smart money sell areas, these two resistance levels, up to this one. And what's interesting about it, the 1624 was the key level of structure that was rejected when it came to Ethereum. But Ethereum is influenced and controlled by Bitcoin as well as total crypto market cap. We saw that lower support level around the 1605 mark didn't hold, but this structure has been holding well, far better than Litecoin. This is what we look for. We look for strength. Now let's blast through the markets. In the last trading session, Bitcoin preempted a move that was actually not obeyed, and that's because the markets came down. But typically Bitcoin does move first. It's a highly risk-sensitive asset. This was throwing a signal to the main markets of a temporary bottom or even a permanent bottom may be in. We refer to these spikes, if they're caused by the news, as news spikes. Unfortunately, sharp angles do tend to reflect. So that's why having a layered strategy to go into whatever you're trading is really important. And all investors become traders anytime they buy or sell. So if you're investing and you're not sure how to trade, you're losing a lot of money. We can also see that the Nasdaq is far stronger than the S&P. Now, how do we know that? Because when we look at this particular price movement, see how it's shot over, it would be equivalent to the S&P 500 coming up to around this level or around this level. It shows that the S&P 500 is not as strong as the Nasdaq. The Dow was substantially weaker. Look at this fresh air gap above. We don't see that, and we certainly don't see it with the Nasdaq, but the Dow is weak. We can also see that the Russell has equated movements very similar to the Nasdaq. Now, what's happening inside Germany's market? Well, at the moment, it's closed, so not much. What about Japan's market? It's starting to come up, but it's looking more like the Dow in terms of its recovery. What about the ASX? Yes, a Dow-ish look here. What about China's? China is still going up, despite all the negative news headlines. Don't forget, bad news tends to hammer in bottoms, and very good news tends to hammer in tops. What did the US dollar do as Bitcoin was spiking up? The DXY said, hey, I'm going to join you. I'm coming up at the same time. But the DXY has a gravity that we need to be aware of, and a rising DXY is typically not good for Bitcoin, for commodities, gold, silver, and not good for stocks. Looking at the different exchange rates can be a very good thing to do. It can give you an edge, and that's what it's all about. When we looked at the DXY recently, we noted that there was a lot of structural resistance around this level. If we got above that structural resistance, things could really take off. And what have we seen? Things have really taken off. It's vitally important to know where the structure is, and the CTKS method has marked up objective dynamic market structure or smart money buy and sell levels since 1967. When we pop on the indicator, what do we see? It's like reading an EEG. That takes a little bit of practice and some knowledge to do, but I can give it to you very simply if it's the first time you've seen the CTKS method. These lines mean something. They're called SLs or Stanfield levels. And the SL just simply comes from the fact that these lines are drawn up with a standardized process, standards based. What you can see is all the lines tend to have different weights. The lower weight in the line, the lower the strength. The heavier the line, the heavier the strength. What did we see here? We saw a lot of underpinning structural support, and price rebounded through that level to structural resistance. It confirmed structural support, and it eventually got over this structural resistance. As there was quite a fresh air gap here, we said that if we get over this particular area, the 106.1079 mark, we're in all likelihood heading up to the next structural level at 106.4444, or more likely the 106.7200, and that's exactly what has happened. Currently, the DXY is 106.6800. Many people thought that Bitcoin rallied because of Gary Gensler getting raked over the coals by the Senate, and that did have something to do with it. But the US 2-year yield dropping like a brick had more to do with it. This is why you've got to be careful about the news. What did we see? Bitcoin absolutely blasted its way through so many structural resistance levels, but then it started to falter because the US 2-year yield came back with a vengeance. One of the news articles was that oil shot up. Indeed it did. And with the CTKS method marking up the structural buy and sell levels since 1861, you're going to see something very, very interesting. Let's zoom into that price. Many thanks to TF Theta for your very kind comment, my friend. Focusing on the Tier 1, Tier 2 and Tier 3 charts is very important. It shuts out the fear, uncertainty and doubt. The only place you get these charts and this knowledge is in the CTKS method service. Thank you, my friend. Now let's make it real. Say you were trading oil and oil was looking like this. You noted that there was a structural resistance at 92.06 and then a fresh air gap up to structural resistance at 93.88. When you have a fresh air gap like this, what does it mean? It means the price can come up very, very quickly because there's no structure to stop it. And that's exactly what happened. Then what do we note about this structural resistance level? It's not a light line, it's a heavier line, which means it's stronger resistance at that approximately 93.89 level. What does that also mean? Oil is trying to get above this level, but it's strong, it's having trouble. If it can't get above, it's coming below, and if it can get above, it's going to the next one. When looking across the Tier 1, Tier 2 and Tier 3 charts, Rundle Rich has some incredibly good advice. Use them to stack probabilities. And Rundle Rich says, before I do any buys, I always do a fly-through of the 27 charts, and this checklist habit has become a new rule for me. Thank you for sharing and for your kind words, my friend. If you do that rapid Rundle Ridge fly-through, what you will see is that there's a potential for a bit of a short-term bounce and then a larger sell-off. This doesn't mean that Bitcoin and crypto can't come up. They are likely to. But please note that the upside might be limited. Things can change very quickly, so you need to keep your eyes on those charts. At the moment, we're seeing crypto come up. The actionable steps to deal with FUD and FOMO. First thing, check your SLs on Tier 1, Tier 2 and Tier 3 charts. Then, understanding the intercorrelations of Tier 1, Tier 2 and Tier 3 charts is exceptionally important. Also, understanding the interdependencies between Tier 1, Tier 2 and Tier 3 charts. Your three-dimensional risk management is absolutely critical. Know what you will do if price goes for you, goes against you, or goes nowhere. When you do suffer a loss, and losses are just part of financial markets, make sure that you extract value from that by turning it into a personal rule. But focus on creating Zone 3 and Zone 4 rules, not Zone 1 and Zone 2. In the comments as part of the active learning, please let me know how you deal with FUD and FOMO. It takes a lot of time to mark up Tier 1, Tier 2 and Tier 3 charts. In fact, it's a full-time job. Not many people have the capability to just spend the time marking up your charts with the highest degree of accuracy possible. But for $1.30 per day, you get 27 videos and 27 TradingView indicators, one for each of these Tier 1, Tier 2 and Tier 3 charts. That is something that anybody can afford if they're serious about making money inside financial markets. Please note that the Foundation membership to the CTKS Method service at ctksmethod.org is closing at the end of this month. There will be no price increases for current members, but new members, the prices are going up. If you would like to learn the mechanics of financial markets, Perperatum has kindly offered a CTKS partial masterclass scholarship. You can apply for that partial scholarship using the link in the description of this video. Have a great day or night ahead, my friends, and Kate and I look forward to catching up with you again in the next video. Bye for now.